Value investors from around the world are gathering in New York today to talk about investment ideas and strategies at the 5th Annual Value Investing Conference. Bloomberg's John Erlichman joins us live from the conference with the hedge fund manager whose small cap fund has gained 57% so far this year. John, take it away.
Yeah, not too shabby. It's Candace Weir of Paradigm Capital, Matt. You think of stocks that have had good runs. Apple's obviously one of them. But Candace, the Russell 2000 has easily outperformed the Dow this year. In fact, off the lows, had we seen as big a rally in the Dow as the Russell, we'd be closer to 11,000 than 10,000. But you still see some value out there when you look at the small cap universe.
I do. Name by name, I do.
Tell us about the sectors you're watching more specifically.
Well, we think our strength is in the consumer discretionary side. Has historically been our strength. Healthcare and technology.
Retail, healthcare, technology. Versus, say, the financials and energy were a couple of groups that you said.
I think I said in my talk that we really kind of would stay away from those because we think they're so macro-driven as opposed to company-specific driven, and we believe it's all about one name at a time.
You talk to management religiously. Every 5 weeks you were speaking to them. What are you hearing from smaller company owners right now, or CEOs, I should say, about whether they can get their hands on credit or properly run their businesses?
I think credit is still an issue. It's credit to their customers is the issue, not their credit, because we try to avoid companies that have any kind of big leverage to their stories, but credit for their customers. You have somebody that sells to a doctor who can't finance the next piece of equipment. That's still out there. It's still very tough.
You demand to speak to management.
Absolutely.
This is a prerequisite for you.
Yeah, absolutely.
This week, a lot of discussion about the issue of insider trading, as you know. How willing are CEOs to talk to you right now? Do you think if the issue of insider trading is back in focus, they're going to be less so?
I think that could be a risk, but I've said again consistently to any management team, I'm not looking for inside information. I'm looking for inside how you run your business. And if you're not able to share that with me, then I'm not going to spend, our typical investment is $5 to $10, $15 million a pop. I'm not going to do that by reading the press releases.
What's something that the average investor can ask when they call up a company and they're not about to invest $15 or $20 million?
I think you probably do have a harder time accessing senior management, in fairness, but I think you still can ask questions simply like, tell us why you're feeling good about the new merchandise for the fall. Tell us what your holiday look is. Tell us what your new buyer's doing. Tell us why, what are you doing about inventory turns?
Well, you mentioned merchandising and how you like the retail sector. Wet Seal is an example of a name that you own, and I think it's an interesting story in that they've got cheap product, fashionable. How has that one played out, however, versus, say, an Aeropostale, a name that's had a bigger run year to date, and capitalizing on the higher pricing at, say, an Abercrombie & Fitch?
I think Wet Seal's in the right space. There's two major players there. There's Forever 21, Charlotte Russe. Charlotte Russe was just taken out about 2 months ago at, I think, a little less than 7 times EBITDA. Wet Seal's at 4 times EBITDA. They absolutely do the same thing in the same space. I think the valuation disconnect between Aeropostale is that they've executed better consistently than Wet Seal has in the last year.
We just had earnings out from Apple, a beat on the top line. This is a big question in earnings season. Can companies come out with better than expected sales numbers after all the cost cutting? In the small cap world, are they at that stage where you're seeing the revenue growth, or is it still a story of cost cutting?
I think, funny, I just talked about this last weekend. I think it has to be a story about revenue growth again. The company just a cost cut. I think that story's done. You better be able to discuss revenue growth on the horizon. Maybe not the fourth quarter of 2009, but if you're really talking no revenue growth in 2010, I think that becomes a little bit of a game changer for some companies. So I think they should be able to discuss it now.
Okay, so you like retail. What is the scariest area in the small cap universe right now? What are you just absolutely avoiding?
That's a good question. I guess we're avoiding names that we, again, as I said, we don't clearly understand. I think we avoid names we can't understand. We'd avoid, biotech. Those are really binary decisions. We're not prepared to make those bets. We like to think we're defensive on the downside. We've had 2 down years in 11 years. We don't like to give away the profits we've made. So
makes sense. Don't buy what you don't know, guys. That's it from the Value Investing Conference. We'll send it back to you.